Main Street Capital Corp, ticker Maine, is a company that's been requested a couple times by people who watch the channel and members of the Discord. So I'm going to oblige and look a little bit closer at this company, give you a general overview of what kind of company it is, and how I tend to look at valuation for those companies. And you can draw your own conclusions as to whether this makes sense as a purchase at the current price. So, Main Street Capital Corp is a business development company, or BDC. These are a special sort of tax classification similar to a REIT in that they have to distribute the vast majority of their income to shareholders to not be taxed at the corporate level. So, a hallmark of the BDC is typically a high starting yield. So, we've got a 6.5% starting yield in the case of Maine at today's prices, as compared to something like, 2, 3, 3.5, 4%, like you might see in the dividend paying companies in the broader market, right? You might get 3% for something like a Coca-Cola or an HP, or you might get a 1.5-2% for something like Walmart or something like that. But this starts at a beefy 6.5%, and much like their REIT cousin Realty Income, they pay monthly on this one. So if you're looking for a steady stream of monthly income, this may pique your interest in some ways. Now, this company, as a business development company, basically what they do to bring in that distributable income is they finance business activities for a certain type of business that they call lower middle market. So how they define that at Maine is revenue of $10 million to $150 million per year, EBITDA in the $3 million to $20 million range, and they also look for competitive advantages, stable positive cash flow, and good management team with established records at these companies. So they have over 200 different companies they work with currently. So with that many companies, it's definitely a full-time job for management to be, doing their due diligence with each of these companies and their management teams to make sure they can afford to pay back all of the different financing and lines of credit and such that they offer. Now, when it comes to valuing something like a BDC, generally speaking, because of the fact that a lot of the things they would consider assets are debts that are owed to them by others, I tend to look at it as a price to book as sort of the go-to, rather than something like a PE or a price to sales or something like you would use in a traditional business. Price to sales is something you might look at for a tech company that isn't all that profitable yet to compare it to other tech companies. Or a PE is something you might look at for sort of a slightly more mature old school business that's had consistent profits for a while. But price to book is what I like to look at for BDCs personally. Now, I don't know if other people in the market prefer this. You could, I guess, also use a dividend discount model if you're valuing it based purely on the income it provides to you. That would be perfectly acceptable in my mind. But price to book is pretty easy to look at a glance to see if the thing is overpriced, underpriced compared to what's normal out there. So one thing I noticed for Maine in particular is that they always seem to trade at a premium on their price to book, because in theory a 1.0 would be considered fair value. I noticed that with other BDCs, like this one is Horizon Technology Finance Corp, which I also have in my portfolio, they tend to really stick pretty close to that 1.0 price to book. Now, granted, sometimes they're a little lower, sometimes they're a bit higher, but it seems like they always want to, like, if they're higher, it always seems like their price wants to go towards the price to book, and if they're lower, it seems like it wants to go back up to the price to book. Right now, it's at a 1.3, which is, maybe a little high for one of these companies, but Another one that's a little bit bigger than Horizon is Ares Capital, ticker ARCC. They also kind of follow that same rule of thumb where they stay much closer to that price to book. So the fact that Maine over the last decade has maintained a premium price to book ratio, as in, significantly above a 1.0, I think that means that generally people perceive them as having a superior strategy, superior management, superior runway for future growth of the dividend. So that's definitely something to keep in mind. It may be that Maine is worth paying a bit of a premium when compared to other BDCs because of the fact that they do, in fact, pay this dividend monthly, and they do grow it each year by a little bit. And they do occasionally also pay the little special dividends. So, like back last September, they had this random 10-cent dividend they paid a couple weeks after their regular 21.5-cent dividend they had. As of today, the dividend was actually raised not that long ago from 22.5 cents to 23 cents per share per month. And yeah, that's where it sits today, is 23 cents per share, paid out every month. If you're personally interested in Maine, I would try to understand a little bit more about the types of companies that they invest in and what the future outlook really is for those, and what their strategy is for continuing to grow the distributable income they can pay to shareholders. So if we look at this list of companies, you can see that these are not the kind of companies that you will have heard of or really be able to find any specific information on by researching online or anything like that, because most of them probably are not publicly traded, and again, they're in that 10 million to 150 million revenue range, where there's probably not a lot of research or information out there. So you really do have to really look at what Maine's management is doing and what they're looking at, and determine if you can really trust their judgment when it comes to these investments that they're making and this money that they're lending out. Now, so far, I think they do have a pretty good track record as far as what they've been able to do with growing that dividend. But it's about the future, not the past. The track record definitely does matter. I definitely will give more of a benefit of the doubt to someone with a good track record than a bad one. That's why job applications look for your work history and they run a criminal background check, and why banks run your credit report before they'll lend you money. So that being said, I'm definitely always interested in looking at this again anytime it tends to dip. I doubt we will see it go down to a 1.0 price to book. So it's really about determining, is this thing worth the premium valuation that it currently demands in the market at any given time? Well, ladies and gentlemen, that's my quick overview of Maine. Let me know in the comments below if you own any shares of this stock, if you're interested, and if so, at what price. Hop on the Discord, link is in the description. You can also join the channel, become a member. Something great will happen in my YouTube portfolio when I reach 10. I'm currently at 6, so we're 60% of the way there. Help me reach 1,000 subscribers by hitting that subscribe button so I can get that sweet, sweet YouTube ad revenue and literally make tens of dollars. That's about it. Take it easy, everyone.